Welcome to the CoinGecko podcast. For today's episode, we have Sam Williams, CEO and co-founder at Arweave, a decentralized storage startup. So we're happy to have you on the show. Welcome to the CoinGecko podcast, Sam.
Thanks for having me. It's great to be here.
Yeah, to start things off, Sam, maybe can you give us at CoinGecko, the community here, a simple explanation of what Arweave is and we'd like to know more about it.
Yeah, so Arweave is a permanent information storage system. I guess your audience is very aware of blockchains, and so they're probably aware of the idea of on-chain storage, storing something in the blockchain itself. We can think of Arweave basically as on-chain storage that scales and has appropriate incentives to make that work literally permanent. So the way it does that on the technical side is a new mining algorithm, which rewards people for storing data and rewards them more for storing data that is stored less. And that it kind of auto levels the storage over the disk space that is provided. And then on the economic side, we have what is essentially an endowment structure. So you pay for essentially 200 years worth of storage upfront when you use Arweave, which sounds expensive, but it's about 0.4 cents per megabyte approximately. And then over time, as the cost of storage declines, you essentially gain interest in the form of storage purchasing power on that initial 200 years. The greater rate that you're using it, essentially. Just like with a university endowment, you make some interest on the principal that's put aside, and you use the interest to pay for people to go through, get degrees. It's the same principle, but just applied to data storage.
So I kind of get the idea where instead of paying for 1 year or 1 month, you pay for 200 years upfront, and then you got to store your storage essentially almost permanently. I guess my question is, how do you come up with the 200 years number? Like, why 200? Why not 100 or 500? And
right.
I guess this is too far to ask, but what happens after 200 years? Like, do they disappear?
Right, exactly. So over time, the cost of storage declines, and you only take from the storage endowment what you actually need to pay for storage. So essentially, what you're getting is interest on that 200 years in the form of storage purchasing power over time. So imagine, and this is the average rate, the cost of storage declines at a rate of 30% per year. That's what it's been on average for the last 50 years. So at year zero, when we put it in, we've got 200 years worth of storage purchasing power up front. At the end of the first year, now we actually have 260 minus 1 years worth of storage purchasing power for the principal that we've already put up. And you can see as this compounds, you actually end up with more storage purchasing power, not less. So the question of why, why 200? And it's actually a reciprocal, which is why 0.5%. So why expecting a rate above 0.5% for storage cost declines? It partially comes down to conservatism. Like, we think that blockchain protocols that are successful offer a 0-to-1 service. Something like Bitcoin, for example, took digital scarcity from 0 to 1. Ethereum took smart contracts from 0 to 1. These are not just copying business models that you could do in the centralized world and the decentralized world. These are making you, giving you the ability to do something you just couldn't do before. And we think that permanent storage is another one of those. It's something that you couldn't trust a centralized company to give you at any point in time. You can, however, trust a protocol to give you this service because it won't change. And the participants can come in and out over a very long period. And there's no corporate governance to worry about. There's no profit motive or incentive for the network exactly in and of itself and so on. So it's the kind of thing that you can allow a network to do. But in order for it to be, to take off, you need it to be sufficiently conservative and would you say, geared towards achieving its one fundamental goal for people to be able to trust it. So we could have probably set it at 20 years, and that would probably be okay. But if we'd done so, then people might not trust it, and might not catch on. It might not actually live up to achieving the one core important, 0 to 1, if you will, change that it allows. So we picked a much more conservative number. Which,
I guess the question then is, if it's conservative, it almost feels that if I want to store something on Arweave now, I'm sort of overpaying for the endowment fund, right? And over this course of 200 years, someone's going to make a profit from this, right? So who is going to take the profit from me overpaying on this endowment fund? Is it the protocol, the miners, or who's going to take this profit here?
Yeah, it's an interesting question. Well, at the moment, what will happen, I don't think this will ever change, is just the funds just go into the endowment where they just stay forever, basically.
Okay, so the
kind of like
protocol has this endowment which controls all this fund, I suppose.
Exactly. Yeah. So it's kind of like burning, with a caveat, like burned, but if for some crazy reason in the future, the storage costs actually increased, then the amount taken from the endowment to pay miners could also increase as well. So burnt asterisks, if you will. And that, I guess, benefits token holders.
And the endowments, I mean, when I pay for storage on Arweave, I pay them in the form of AR token, right? And this AR token fluctuates with the USD price. So if the price of Arweave goes up in the future, that means, yeah, your endowment will have a lot of money, and then
that's already happened a lot.
Yeah, I've been monitoring the price. Yeah.
Yeah, the endowment has, like, I think at this point maybe $250,000 worth, $300,000 worth of storage, worth of USD inside it to pay for storage. And at the current time, we're talking about like 5.5 terabytes or something, which in temporary storage terms is not a lot, but in permanent storage terms actually is quite a lot. But even still, now the expected storage cost decline rate, I calculated this recently, I wish I could remember the exact number, but it's the expected storage cost decline rate to keep this to work perpetually at its current rate is something nearer to 0.01% storage cost decline per year. And then the thing will run forever. But yeah, there's definitely another reason that we chose 0.5%, which also gives that reciprocal 200 years, is because it just gives a lot of slack for potential changes in the token price, which we all know, like early crypto networks, there are changes. Yeah.
Do you see any problem? Like, I mean, when token price is rising, like everything works out well, right? But I mean, touch wood, but like, what happens if the token price goes the other way around instead? Then well, that's down 99%, for example. I mean, I hope it doesn't, but I mean, if it does, like, then will it still work out then?
Yeah, so I think 99% is a little bit extreme, but like 90%, who knows? Yeah, that's why we use such conservative value. So that's just another reason why, basically.
Okay.
Yeah, at this point, obviously, there's so much in the endowment, and it's interesting because it goes both ways. So you put a lot of tokens in the endowment, and then the price moves up, and now those tokens are worth even more. But obviously, if they go down, then you still have this like extra buffer that you've generated. So now this 0.01% can afford to go to 0.5% again, or whatever it happens to be. This is an interesting question.
Cool. So decentralized storage is not essentially a new concept. I mean, I've been in this space for some time, and it's been attempted by several teams a few years ago, since 2014 or so, or 2015, like Siacoin, MadeSafeCoin, Storch, and more recently Filecoin with IPFS. I think you kind of mentioned briefly that the differences between these different decentralized storage is that Arweave is kind of going after the permanent storage solution, whereas I believe the others are not going after the permanent storage. They go more for a fixed time storage solution. But I would like to hear from you. What are the differences between Arweave and all the other decentralized storage solutions?
I think what do they say? Knock the nail on the head, or whatever it is. Yeah, it is a permanent storage system, which none of the others offer, and no one is actually in this lane at all. Which, frankly, I think is kind of surprising, because it's just such a big, obvious and big opportunity. I personally find that. So I was invested in the storage ICO actually way back in the day, and I think like temporary storage systems are interesting. I don't think that they're not 0 to 1, right? They're going to have to go and try and compete with Amazon on cost. And that's going to be really, really tough, like really tough. I'm not sure that that's a winning strategy for decentralized networks. I think you have to do something new. And that's kind of why, Arweave is focused on this permanent storage angle. And then also on top of Arweave, which we haven't really covered yet, is what we call the permaweb. So it's like a collection of protocols basically expose all the information in the Arweave to people's web browsers. And that's like a whole different game. Like, it's literally a permanent decentralized web that lives inside the system. I don't think many of the others are really going after.
So how do you get this idea to build a permanent storage solution? Like, I mean, everyone's kind of building on this temporary or fixed time storage solution. Like, I mean, and when you came about and said like, let's build something truly game changing, permanent storage. Like no one's ever thought about it before. Like how do you get the idea? Why do you do it? You know, here.
Yeah. Well, if you've ever read 1984, yeah, you know the idea of the memory hole. Okay, so for the listeners that haven't read the book, basically the book is about a dystopian future, or would have been future. It's actually written in 1948, and it was talking about the future as 1984. A dystopian future in which, you know, authoritarian regimes essentially ran the world, and they did so largely through the control of information. And part of that control of information was control of access to information about the past. And it's through this, it's through this mechanism that they're essentially allowed to control the way people think about the present and subsequently the way that they act in the future. This was like a really key insight, I think, from that period of time, is that actually how you control large numbers of people is not necessarily through force. You do so through control of information. And, you know, this book was trying to exemplify that idea. And so the main character in the book, Winston, and also the smallest subunit of Arweave tokens is called a Winston after this character. The main character in the book, his job is to censor records of history by throwing them down what he calls, or what is called, the memory hole, which is essentially a fire pit. So his job is to collect up all the records of a past historical event that is now unfortunate or the regime doesn't want people to know about, and to burn them all. Yeah, we essentially wanted to make that impossible. And we saw that with blockchain technology, you are quite a lot of the way there to some extent. You've got replication of a piece of information all across the world without a central reader, and you've got the means through which to add data to that. But of course, what you didn't have was the means to add arbitrary amounts of data and actually incentives to make that storage sane and consistent. Like people think at the moment, you know, even if they do store data on Ethereum, some NFT people that try and do this. Yeah, like, I know, which is crazy. It costs like thousands and thousands of dollars for 32 kilobytes, but whatever, people try. Yeah, there's no actual incentive for people to store that data. The miners are only incentivized to store just the minimum amount that is required to take part in the mining process. So even if you did blow up the size of the chain to store more stuff in it, then people aren't incentivized. So anyway, we figured, okay, we saw the world moving in this direction where it would make more sense to have a decentralized, reliable archive of history. And we saw the kind of technological components that would be needed to do that. And the first thing we set out to try and do was actually build a newspaper archive. Yeah, it was just basically trying to get newspaper articles and make them live forever so we didn't forget history. But of course, we realized pretty quickly, as soon as we've solved those problems for a newspaper archive, well, now you have a new kind of archive that can be used for everything. Yeah, and that's kind of the genesis of the idea.
Interesting idea how you thought about this dystopian future and how governments will try to censor things, and you try to build a web where someone in the future can sort of reference things from the past and see for themselves that this is what it is. Kind of like an internet archive in a decentralized manner. Yeah.
Yeah, chronolinks as well as hyperlinks, like links through time. Yeah, it's interesting.
So you mentioned briefly just now about how the other decentralized storage solution were kind of like trying to compete against Amazon S3, and that's kind of like not a good idea because there's no way one can drive efficiency gains and compete on cost with Arweave. So maybe, to compete against Amazon S3. So maybe to give us some perspective of cost. I'm not so sure if you're aware of how much the others are charging, like how much it costs to store on IPFS versus how much it costs to store on Amazon S3, and then how much does it cost to store permanently on Arweave, for example?
Mm-hmm. Yeah, so the others will be somewhat cheaper. I think people have done like the crossover calculations, like at what point does it become cheaper to store on Arweave, that kind of thing. It's like a few years. But I really think that the benefits offered by permanent storage for information. So being able to, for example, commit a blog post and know that blog post, your ideas, your writing, can be perpetuated literally far, far past your death, like far into the future, presumably forgotten after the last human or human-like intelligence is gone. That's a pretty cool thing to be able to do for 0.4 cents a megabyte. And for a normal blog post, and this is an interesting question. It's like, well, for what data does it make sense? For a normal blog post, that's a power that Arweave gives you for like, let's see if that blog post is 30 kilobytes or something. It's 30. It's 0.001 cents. Someone's going to check my math. I'm going to be sorry.
That's cheap.
A tiny fraction of a cent. Yeah, so that's actually a pretty damn good deal. But of course, if you've got like, I don't know, an archive of really, really, really unimportant video, something that's like a very, very large file format, and you want to store a lot of it, and the density, what we call the information value density is low, basically, then you might not want to store it on Arweave. You might want to store it somewhere else, and that's totally okay by us. Please go store it on storage, my storage tokens, which I still have, or rather I haven't picked up yet. Anyway, yeah, it makes total sense to use another kind of system for that. But there are many, many things. We would argue almost everything that people publicly commit to the web, that they really want this component of like spreading it as far and wide as they can, if only the functionality were available to them. And that's what Arweave does.
I'm just curious, right, for Arweave, like, do you have any stats on how much data that is currently stored on the Arweave network now?
Yeah, it's only like 5.5 terabytes or something, but the difference is that this is permanent data. They're like, yeah, replications of this are far, far more than you would expect in a normal system. So I would say at least into the like 250 to maybe 1,000 range at this point, quite possibly a lot more than that. Yeah. But also, again, it's about the information density. So I would say at this point, there's probably 15 million, maybe 20 million different pieces of data on the network as well.
You mentioned information density, but I don't think I really understand what you mean by information density. So maybe you can elaborate a little bit more about that.
Yeah, absolutely. So you've got a file that is 1 terabyte, and its value to you might be $5, right? You've got another file like this blog post is 30 kilobytes, and its value to you is a few $100s. So you can take these factors and you can calculate approximately a value density for the data, if you will. Does that make sense?
So you can, when you store data, you can sort of put a value or on how much you value the data,
no.
How do you?
We're using this as a heuristic that people go through in their head. So it might not make sense if the value density is low for you. You'll instinctively be like, I don't want to pay that price because the files aren't worth that much to me, basically. But if it's something like a blog post, then the value density is much higher, and you see like, yeah, that's like, a 100th of a cent or whatever it was is a great price to store this thing forever. See what I mean?
Okay. Yep. And I'm just curious, right? You mentioned about 5.5 terabytes of data that's been stored on Arweave right now. I'm just curious. So who are the guys that are storing data on Arweave now? What kind of use cases have been shown to be using Arweave now?
Yeah. So one of the first ones that started getting picked up most recently, well, I'd say there's 3 key areas right now. People storing NFTs is one that's growing excessively rapidly. Like there's a real growing understanding that like, hey, if you've got an Ethereum contract, which has got a URI in it, right? And that URI is stored somewhere that is not permanent, then eventually, inevitably, all of them will break. Like they are all stored on someone's centralized server, and one day someone is going to turn that off. And then eventually your NFT is going to be worthless. That's crazy, doesn't need to be this way. Just store it on Arweave, and then it's there forever. It makes sense. People are starting to do this en masse very, very rapidly, which is really cool to see. Another one is actually chain storage. So one of the interesting problems you have with blockchains is that they're essentially ever-growing ledgers that don't have any incentive to store them, as I was describing before, actually. This is kind of a problem. Eventually you get to this point where the chain is just too big. I was actually just talking to someone a while ago, like, the Terra chain or something like this, I believe is like 200 gigabytes, and the software for syncing it is not necessarily so optimized for dealing with that number of transactions, and so it takes you like a year to sync to the latest block. That's a bit of a problem. So what you can do is you can store all that data on Arweave, and you can have your nodes very, very rapidly pull it off the Arweave network where it's permanently stored, incentivized forever, and sync extremely quickly with the network. So that's really useful. That started with Scale, I think, were the first to do that. And then very rapidly afterwards, it was Solana. And then after Solana, it was Polkadot. And now there's like 3 or 4 more people we haven't yet announced that have come on board to do this. And this has grown very rapidly into a project on top of the network, actually a startup called Kive. And Kive, basically the idea is to build permanent verified data feeds. So essentially they were just trying to solve this problem of like, we put together a co-funded grant with Polkadot, where we're saying, hey, let's get all the Polkadot data onto Arweave, which makes sense, it's not so complicated. But they were like, well, what if the person that's running this bridge is actually malicious? How are we going to know that they're not tampering with the data? Then they built out this really elegant solution using SmartWeave, the smart contracting platform on top of Arweave, to reward people for running, essentially running these archiving nodes and verifying each other's data. And so now you can get these like verified data feeds of almost anything. So that's really, really powerful and pretty exciting to see. The third component is people building what we're calling profit-sharing communities. Mm-hmm. And this is something in the perma-web ecosystem. So in the stack of protocols on top of Arweave that expose all this stuff to people's web browsers. I think this is super, super powerful, and we're only seeing the beginning of it, but it's starting to take off very, very rapidly. This ecosystem has only existed for like 6 months, and I used to count how many dollars had been committed to funding these rounds that they're building, and started as like, it's $500,000, and it was $1 million very rapidly, and it was 3 million, now it's 5 million, and it's like, it's increasing in an exponential pace, so that's pretty cool. But the basic principle is building decentralized web services. So services top to bottom that run in a decentralized way. You can imagine like a decentralized Twitter, for example, where the community owns the profit created by the application, and the entire thing runs on decentralized infrastructure. I think one of the things that is kind of missed in the crypto community sometimes is actually a lot of these dApps that we use. They like decentralize one small component and everything else is centralized. These are the opposite of that system. This is like taking it to the nth degree. What if absolutely everything ran on like censorship resistant distributed infrastructure?
Interesting how the 3 main use cases that you mentioned, NFTs, like a lot of people don't realize this, like you mentioned, like this, the images are stored on some Amazon S3, and at some point I think somebody tried to rug some of these NFTs, then they replaced all the NFTs with actual rugged images. That was quite hilarious. So kind of good. I mean, we minted some NFTs before this, and we were kind of studying the architecture. It's like what we found was that, back then it was at least kind of a pain trying to put it onto IPFS. So we kind of, okay, let's just put it on S3 just to put it out and try out and experiment NFT. But we see how this was unknown to many people, like where is the actual image stored, and I'm glad that people are talking about it right now, but we saw this a couple of years ago.
It's rapidly becoming, I mean, we've been shouting about this for a long time, but it's rapidly becoming like a known thing in the industry.
Yeah.
There's this effect called like an information availability cascade, where like it goes from suddenly almost, no one knows about an idea, a few people know it, and then very suddenly everyone knows it. It's kind of going through that moment now. Yeah, it's pretty interesting to watch.
Yeah, interesting use cases on the nodes as well, because like it is kind of, I mean, it's really painful to try to sync a full node, and I can imagine like moving forward, like instead of like syncing it on your local machine, you probably sync it to a decentralized Arweave node, which constantly gets added with new blocks, and then you can kind of run minor
fast sync and that kind of stuff. Yeah.
And then the third one was the profit sharing community. I have some questions on that, but I keep it for a bit more. But let me ask you this question next. Do people store like private information? Like I know you were sharing with me some of these decentralized application built on top of Arweave. One of them that I was looking at, it was like a Google Drive wrapper, like an app that looks like a Google Drive where you can upload like private documents and store them permanently. Arweave, yeah, that's the one. Can you store private information and encrypted private information on Arweave? Is that a good idea, or that's kind of a pretty bad idea to store like private information on Arweave? Right.
This is an interesting question. There's a lot of different schools of thought. Like, obviously, you should not be storing private information publicly permanently on the Arweave. That's like saying, you look before crossing the road. But whether you should store ciphertext on the Arweave, my personal opinion about it is if you look carefully at the way the internet is architected, pretty much anyone can get access to your lines of communication, right? And that's sending huge amounts of ciphertext containing your private information all the time. So really the difference between that and storing the information on Arweave in a very heavily encrypted way is not actually that high. Yeah, that's what I would say about that. I think that it's complicated and people are going to have different risk models. Using some kind of quantum resistant storage or encryption system for your stored data makes sense, but that only pushes the question back further, basically. Yeah, so I think that comes down to people's individual risk tolerances for what makes sense for them.
Yeah. I think at the end of the day, it's like how strong is your encryption? Like, what would be the future? Quantum, like you say, quantum computing, can it encrypt? Can it decrypt whatever? Can it brute force any of the current encryption technology in the future? And then essentially, if you use Arweave, you are trusting Arweave with the encryption. What if Arweave is malicious, for example, or
right? Yeah. I mean, this is one of the interesting things about profit-sharing communities and decentralized permaweb apps is that basically they are permanent by design and by for the utility that they offer, which has these quite interesting effects. Like you can audit the code of Arweave once and have it associated with a TX ID, so it's sent to the network. And then if you go back to that TX ID and that TX ID has been audited and you're comfortable that it is safe and is doing what it's purported to do, then you can be confident that that service will never change. And this is kind of vaguely useful in the case of Arweave, but really very significantly useful in the case of, for example, a email system is an example I always use. So when you sign up for an email account with Gmail, you basically sign over your ability to move away by having your identifier be what you give to other people. So your email address you give to other people, now you're stuck with Google. And they can change the service they're offering to you all the time. Same with Facebook and so on. Like once you get locked into the service, then the company can basically do whatever they want. And you've got to remember that these companies aren't necessarily incentivized by the things that make their customers happy or successful. This is really, really dangerous. I would even argue that it's like the hidden danger with the Web 2 world is that basically the incentive structure is that you trap people into using a new platform and people bankroll this process. And then once they're all in the new platform, they can't really easily leave, then you turn on the money taps one way or another. And this normally means that the quality of the service rendered to the users declines. And people end up being somewhat exploited by the system, I think.
Yep.
Whereas on the permaweb, we can do something much, much different. We can say the relationship between the developer and the user is fundamentally, the developer can release new versions of the software, but those new versions must increase. They must be strictly better than the prior versions. Otherwise, people just don't update and they continue to use the old software. So the trust model and the relationship there is just fundamentally different. I think that's actually really powerful.
Let's jump into the profit sharing communities. And I understand that some of these profit sharing communities, they issue profit sharing tokens to the members. So right. I guess my first question, right, are the profit sharing communities similar to decentralized autonomous organization DAOs? They sound the same to me conceptually, but I would like to hear from you. And then after that, maybe can you share some examples of interesting profit sharing communities that are in the Arweave community?
Yeah, absolutely. Okay. Are they the same as DAOs? They're like DAOs plus profit sharing, basically. In fact, I used to call them, before we did some branding on it, I used to call them PS DAOs, PSDAOs. Because basically the same principle of you have a decentralized autonomous organization, but the critical part is that autonomous organization, the members of it at least, are receiving rewards directly, dividends, essentially, from just holding the tokens when people use the application. And so now the profit sharing tokens associated with the application become a APR yielding asset for them. And they can just see, like, if I hold this for a year, how much relative to my investment am I going to get back as essentially interest? So they're profit sharing in nature. rather than accruing value to the treasury. Now, what are some interesting ones in the system? There's so many, but I would say, for example, where to start? Arweave is a great example, to be honest. It's just a permanent decentralized file sync application. You can easily replace Dropbox and Google Drive for most people. And if you own the token, then you take part of a 20% tip that's added when people upload data. It's very simple, very effective, generates a lot of revenue. Yeah, and let's take another Verto, for example, and it's actually somewhat, what would you say self-referential, because Verto is itself a profit-sharing token exchange. One of the things it does is it allows people to issue images as NFTs, or what we're essentially calling atomic NFTs. So it's a little bit novel and interesting. But basically the idea is that with Arweave, because you can start smart contracts from the tags associated with a file, then now you can associate the contract of an NFT directly with the file of an NFT in one thing, and then refer to them by the same transaction ID. And so they have, for example, an atomic NFT exchange, basically. That's a little bit like OpenSea mixed with Binance, somewhere in the middle, or OpenSea and Uniswap, perhaps. And if you own the Verto profit-sharing token, then you get a small tip every time someone takes a transaction or makes a transaction. Now, suddenly you financialized in a very real and literally made real-time financialization of the profit created by web applications, which we think is really powerful. It allows people to just buy into the profit streams created by the applications that they like. And when they do so, by supporting the things that they think are good, they get a portion of the profit in the future. And the founders and the team get another way of financing the development of the thing they're building.
And what about the Arweave token? Like, what's kind of the tokenomics behind the AR token?
Yeah, well, I mean, it's pretty simple in some way. You use it to pay for storage, but when you pay for storage, instead of the token going directly to a miner, like it would in Bitcoin or Ethereum, or actually before the new Ethereum upgrade, yeah. But it goes into the endowment, and then the endowment essentially, tokens are released from the endowment when the block reward doesn't cover the cost of paying for storage in the network or on its own. So essentially, right now, you're not taking any tokens from the endowment because the block reward is high enough. And that gives us time to basically bootstrap that endowment. And then over time, you just take tokens from the endowment relative to the, to the amount required to pay for storage plus some profit for the miners.
So the miners are people that, I mean, for Bitcoin miners, they run ASIC machines. For Ethereum miners, they use GPU machines. What about Arweave miners? Do they run like massive data warehouses with gigabytes of terabytes of storage, or what kind of miners are there for Arweave?
Yeah, certainly terabytes of storage. So it's a mixture of compute and storage, basically. You store some, and you also do some computation. It's actually what we call a proof of work sandwich, this thing called, technically it's spores. To people outside of the deep tech world, we just call it a proof of work sandwich. What's happening is like you are doing a piece of computation, and the output of the computation is a random place in the network that you have to prove that you have access to. And then you grab that data, you package it again, and you hash again, so you do some more compute, and then you check the output of that to see if that essentially satisfies the difficulty required. So if that is a winning candidate that you're trying to mine. And so this is the system, broadly speaking.
And then I suppose there are difficulty, and then every block can only be mined by a single miner, I suppose, based on the difficulty level, like Bitcoin, or yeah.
Exactly, just like Bitcoin in that way. So, I mean, technically you could mine two at the same height, very occasionally happens, but then someone will mine one on block, one on top, and then you fork recover to that one.
What about the inflation model, like for Arweave, like Bitcoin started with 50 Bitcoin per block every 10 minutes. What about Arweave, and how does it taper off to a asymptote, for example, like a max supply of AR token?
Yeah. So the maximum supply is like 66 million, and there's a few million left to mine, something like that. It's a fairly low inflation system.
66 million, and about 43 million has already been mined. So maybe roughly 2/3 have been, I mean, 3/4 have been mined, and we're left with like the remaining 1/4 that we mine in the next, I don't know, how many more years? I'm just curious here.
It doesn't stop. We use an exponentially decaying curve. So we actually recalculate the block reward per block rather than halving. We actually think halving is like a super negative component to have in a network like this, because it makes a lot of uncertainty in the markets. Like, what will happen after the halving? Who knows? And you see it in Bitcoin every time people start to panic. I mean, you could argue maybe it's good also because it brings some attention to the protocol. Like, I don't know, but we try and keep things stable and predictable and unsurprising. And so yeah, we just have this like decaying curve per block.
Yeah, because like the halving is such a big change in reward for the miners. Like it's like first you get like 50 and then 25. It's like basically halves. Like there's always a question: what's going to happen to all this hashing power? Will miners stay on, or is no longer profitable, and then they remove everything, and then difficulty comes in, and then like, is the network still secure once once the hashing power goes down, and then miners only mine if the price goes up. So the price sort of have to double every 4 years to sort of make sense. Otherwise, there's so much economics and numbers behind it, and that I see where you're coming from.
Yeah, it's a very interesting component. I don't think Satoshi did it deliberately, is my guess. I think it's just like the math is easier. Which is no offense. Like, you don't want to screw something like this up. Yeah. And I know my impression from the Bitcoin white paper, which was an amazing piece of work technically. Like, not diminishing that, it spawned an entire industry that we now all work in, which is worth like $2 trillion right now. It's unbelievably cool. But my impression with the paper was it's almost unfinished. Like, if you really get the feeling when you're reading through it, and you get to the last page or two, it tapers off. Like, I don't know, like, I've got something else to do. I'm going to write this later, maybe. And then it just stops. It's really quite something. And you get that for what it's worth with the Bitcoin code base. It was also pretty similarly like, did lots of sensible things, but they didn't have a block size limit at all, for example, and no DDoS protection until like a week before Satoshi disappeared. I think it's an amazing system, but it's like sort of cobbled together in some sense.
Cool. So I guess one of my last questions, I suppose, would be, what's kind of the plan for Arweave this year, next year, next few years?
Yeah, I mean, what's really exciting about the ecosystem at the moment is it's just reached this very clear inflection point where the founders of protocols, some of them, but startups in general, profit-sharing communities, on top of the network have taken the reins of like developing the things on top. And really our job as the core Arweave team has just become like supporting these people as much as we can. So almost all of our effort now goes into founder support for people building on top of their platform. And it's working really, really well, like amazingly well. It's so cool to see people, they quit their jobs and they raise capital and they go and build a permanent decentralized web together. It's fantastic to see. So we're just focused on supporting that, everything the ecosystem needs to make that happen more effectively, even more effectively, frankly. Yeah, that's the focus. In terms of the core protocol itself, it's pretty much complete. I don't want to change too much about it at this point. There are some things we would like to iron out. We'll keep developing little bits, but we're very much of the mind that good protocols mature and then stop changing. They get to the point where they will be scalable. They effectively solve a problem, and then they mature or not mature, really like freeze. You'll note that all of the important protocols in our daily life basically don't change that often at all. Like power sockets, for example, same format for dozens of years. And there's actually an interesting reason this is very important, which is basically people need to trust that the protocol isn't going to change in order to embed it in things. And the more trusted it is, the more I can embed it in stuff. Imagine, this is an interesting thought experiment. If the USB standard hadn't changed like 5 times in the last, 20 years, I guess, something like that. Yeah, how much sooner would we have seen USB ports embedded into where power sockets are now found? I think almost instantly, actually, because it's an obviously useful thing to have. Like, we've been carrying around these tiny adapters for many, many years. And that, I think, is because people couldn't trust the protocol not to change under their feet. And so there's a very important thing that needs to happen. And you see it with Bitcoin now. Basically, it's impossible to change Bitcoin in any serious way, because we've all bought into this is the archetype of what Bitcoin is and shall always be. Yeah, I think that process needs to happen, and it is sort of happening. That means that our attention now is on the layers on top of the base protocol. So things like Arweave, the smart contracting platform, allows you to run arbitrary amounts of compute without gas fees, with actually just storage fees. Yeah, all sorts of stuff like this that we're working on.
Interesting perspective that you brought up about how protocols shouldn't change. Seems to be, I mean, Bitcoin is, it's impossible to change, but it seems to be quite a different perspective with Ethereum, where there seems to be constant changing of the protocols with the recent EIP and the miners are getting angry right now, and then there's Ep.30, massive changes coming along as well. So quite different philosophy of how things are going about.
Well, and I think part of that is because everybody in their heads knows that a huge change has to happen to Ethereum for Ethereum to survive. And that is ETH2, basically. And so we've got in our heads, yeah, you can change whatever you want about the protocol. We're not going to buy into it that deeply because we know it's going to shift in like a year. And we've been thinking it will shift in a year for the last 3 years, for what it's worth.
And the thing about it is, if too, I mean, you brought up a point. Like my mindset is set that, I mean, Bitcoin is never going to change. If it change, someone's going to fork it and go back to its original ideal. Whereas if it's just going to be constantly changing, there's Ep.2, but there will potentially be Ep.3, Ep.4, Ep.5, and they will constantly evolve. It's kind of like the USB port analogy. Like I wouldn't be surprised if Ep keeps evolving over the years.
Yeah, but I think if you do that, people aren't just going. It's not going to be able to really decentralize properly, and people won't trust it in the same way that they do Bitcoin. Bitcoin has a shot at being digital gold, if not just digital currency full stop, because people can trust it. We think that archives are essentially the same thing. This idea of like, hey, we give you the opportunity to store your blog post in perpetuity, literally forever, replicated all over the world. No one can alter it, no one can take it away, no one can censor it at any point in the future. We offer that for like, a fraction of a cent. And I think that we're going to need to come to like a conclusion on what the protocol is in order for people to be able to trust that. In the same way, to loop it back to the beginning, we were talking about, this 0.5% or 200 years thing. You need to give it some kind of really robust conservativeness in order for people to adopt it and use it for its intended purpose. But it's really interesting, what do you say? Yeah, it's interesting discussion for sure.
Yeah. Thanks a lot for taking the time to explain Arweave to us. Definitely very insightful. I learned a few things over here, and I'm sure anyone listening to this will also learn a few things about Arweave.
Yeah, thanks so much for the conversation. It was great.
Thank you.